All right, in this lesson, we are going to look at the last section of the account and settings, which is the advanced. There's a lot that is in that. So we're going to take a little bit of time here and really go over in detail each one of those. So this lesson will be a little bit longer than some of the others. So let's go ahead and get started. Again, we're going to go up here to our settings wheel, go over here to account and settings, and this will populate for us. On our left-hand side is the sections within account and settings, and we're going to go to advance. So let's go ahead and start by going into the accounting section up here, over to the right, the edit feature, and that brings up this. We're going to go through each one of these. The first month of the fiscal year. Most companies, that will be January, just like your tax year. However, for some of you, you may have a different fiscal year than others. So you can pick whichever month that is. Some of you, especially if you're in the nonprofit, may have, say, a July. So you go through June 30th. July is your first month of the fiscal year. I'm going to go ahead and change that back to January. Your income tax year typically is the same as your fiscal year, although it could be different. So the default, obviously, in QuickBooks is same as the fiscal year, but it could also just be January. And so you need to pick which one is right for your company. Next one is a very important feature here in QuickBooks. It's the accounting method. Now, when it says cash or accrual, it doesn't mean how you collect income. Doesn't mean you're collecting only cash. This is an accounting terminology. Where they have cash basis of accounting versus accrual basis of accounting. And the main differences are when you have a cash basis of accounting, you're really recording it at the time that you are doing the transaction. For instance, when you receive money from your customer, you're recording that as a receipt at the time that you receive it. When you pay a bill, the date that you pay it becomes the date for that transaction. When you move to a full accrual basis of accounting, that's where you could have deferred revenue that you may be booking. You could have some accrued payroll. Gets into a little bit more difficult of accounting, whereas it's actually recorded when you incur it. So for instance, if you bill a client in December but don't receive the funds until January on a cash basis, you would record it in January. On an accrual basis, you would record that income in December, and that shows up on your P&L in December. There is what they call a modified cash. That's where you would use the accounts receivable and the accounts payable of a QuickBooks. And that would be what is called a modified cash basis. It's not a full accrual basis of accounting, but at the moment, QuickBooks does not have that as a toggle. I heard that they are working on it. I hope they get it. So in that case, if you are utilizing the accounts receivable and accounts payable in QuickBooks, then keep that on the accrual basis, even though you are not truly on a full accrual basis of accounting. And again, These are just the general features that will show up in your reports. So when you generate, say, a profit and loss, it will automatically be either accrual or cash basis. When you actually generate those reports in the feature, you can always change that. QuickBooks allows you to change it when you generate the report. This is just the general setting. Last thing here is close the books. A lot of companies like to archive it, especially after they've generated their taxes, so that it does not change, just in case, down the road, you may have to come back to that. If that's the case, if you close your books, you click on that, you put your closing date in here, and then QuickBooks allows you to either do changes after viewing a warning, or you have to actually enter a password in order to make changes to books that are already closed. So this really locks it down. Some of you may want that feature, especially after you have filed your tax return and you don't want that to change, just in case down the way those may be challenged by the IRS. Now you have a good set of books that is locked out and can't be changed. All right, so let's go ahead and move to the next portion, which actually is filled out correctly if we did the company settings correctly, where we filled out the tax form. So that's right there. As you can see, it's just there again. There's your drop down. We've already filled it out correctly, so we can move on. Next pertains specifically to our chart of accounts. Again, we can go into Edit, Enable Account Numbers. This is a feature that is typically in accounting firms. There is a numbering system that accounting and accountants use. Starts with the 1 through the 9, and they can do digits past that, which really will break down on a numerical basis your assets, your liabilities, your expenses, etc. There are a lot of accountants that have used this forever, and they can just think about it. A lot of small businesses don't use account numbers. They really just want the category set up, so you would leave that off. But if you want to go ahead and track it by numbers, you would just go ahead and click that on. If you want the account numbers to be shown next to your name of your account, then you would click that on. If not, you can go ahead and keep that off. Again, do you do discounts or coupons? This is where you can go ahead and set all that up. You can automatically assign it to an account that you have set up. This is really just your chart of accounts that pops up under here. QuickBooks has a default discounts given, and that's an income line item. If that's okay, just keep it. If not, you can always add it in the chart of accounts and get it more specific to what you want. Tips account, we talked about that earlier, whether or not you accept tips or not. If you're in the restaurant industry, you do accept tips. Like I mentioned earlier, say a moving company or anybody else. Again, you can set up an account for your tips and your income. You can always add a new one if you don't have one set up, and this will automatically be booked to that account. Very important you set it up here, do it right the first time. You won't have to worry about it. It will always be in the right category. Same with your billable expense income account. You know, if you have expenses that are billable to clients or customers, then this is just the general account set up. If you have a different one that you want to set up, you can always add a new one here. So these are some good general settings that are important to look at if this applies to your company, because then it will be set up once. You don't have to worry about it after that. So that is the first part here. I really do want to break this up into 2 lessons. There's a lot of information in here, and I want to make sure that we are able to digest all of the information. So I'm going to go ahead and end this lesson on the chart of accounts, and we will pick up the next lesson under here, the categories.
I gotcha.